Hello and welcome to Option Hotline. I am Keith Harwood. I'll be teaching you your 12-part course that I'm super excited about, understanding some of the basics and intermediate level options analytics that I've learned over 15 years of my experience. First, I always have to give my disclosures. All services and content are provided for educational and information purposes only and not intended as legal or financial advice. Please take a moment to read through these disclosures, and then I'm going to give you a little overview of what we'll talk about in the course so you can get excited about what's coming up soon. All right, very first, make sure you enjoy your copy of my ebook, Think Like a Market Maker, Profit Like a Pro. This is a great lead-in for the course, as a lot of the information present here will be presented and explained further in the course. So take a look at it. It should take you a few weeks to get through, so you may not get through it before the course begins, but at least get yourself a primer on it, and we can then go from there, and you'll be better prepared for the course. One of the first things that we're going to be covering is identifying a technical breakout or a new trend forming. And some examples that we might talk about will be rectangles, triangles. There are many other breakout type formations. And then there's also trend following signals that of course will be part of our conversation. From this chart, just so you're aware, my charts, I always include the 10-day moving average here in purple, the 20-day moving average in green, the 50-day moving average in blue, the 100-day moving average in yellow, and the 200-day moving average in red. Now, we'll talk more about setting up your charts so that you have all the tools that you need for success once we get into the course. But just as a primer, these are some of the tools that I use going through my course. We'll talk about formulating option strategies, of course. So there's a great example here. Just a simple call position has a very linear payout where it keeps going higher. Versus a call spread where it peaks at some point and then flattens off. We'll talk about how you can decide between those two types of positions as you go through your strategy and what you're looking to achieve. As you can tell, the call spread has a greater payout in between $100 and $112, but above that, it starts to get better for the call outright. So this is an interesting setup and something that we'll look at more during the course. Of course, we'll need to understand the complexities of option theory in order to set up the strategies that we want best. One simple strategy or Greek in analytic is the fact that the call option delta changes over both price and time. That's not something that people normally discuss. They're normally focused on just the price, but price and time are factors for a call delta. So we'll discuss that and many more complexities of option Greeks so that you can formulate the best strategy that takes advantage of the Greek risk that you're looking to leverage. Now, we'll have to understand complex options analytics, For example, looking at a butterfly position, you can see that this has a very different payout than an outright call or a call spread. It peaks at the middle strike and then falls back off. And it particularly peaks when you get very close to expiration. So something like this can be a very useful tool, but it has to be used the right way. We'll talk more about how to use a butterfly when we get to that point in the course. Finally, I'm going to talk about trading smarter by utilizing the highest expected value trade strategy and managing your risk. So when I'm looking at something like a call spread here in Tesla, I can look at the value over time and know that if we don't get an acceleration in the move up, it starts to lose value. But if we get an acceleration and move up over time, it can gain extra value. That's important when you're evaluating a call spread versus a call position, because at the end of the day, we want to maximize the expected return of any trade and maximize the risk reward benefit. So maximize that reward potential given the risk. Maximize the expected value. That's all we're really focusing on is expected value, and then of course sizing the portfolio correctly. If you do have questions before the course begins, you can always contact me, keith@optionhotline.com, or you can call me 312-600-8004 for a brief conversation. Email is usually better, but if you prefer a phone call, I'm always available. Thanks again for joining Option Hotline with my new course, and I'm really excited to get started here soon.